Okay, good evening. Um, Hopefully it's all working. Can someone just let me know they can hear me okay and that the stream has started? And yeah, hopefully, hopefully it's all working. Yes, good. Hi Tom, and hi Roderick. Greetings from Mexico. Fantastic. It's great we get such a global audience. I mean, I suppose it's not surprising the fact that it's cryptocurrency, and it's one of the things that is truly cross-border is great. But it's I always find it amazing. I can stand here and be in my house here in Bristol and talk, and there's people from all over the world here. So that's fantastic. It's really good. Okay, just waiting for see if there's a few more people about, and then I'm going to be talking about exchanges today. I thought people have asked about the decentralized exchange in the XRP Ledger, so we're going to talk a bit about that and talk about some of the other exchanges and things going on as well. So yeah, just like I said, just wait for a few more people to join. Okay, well, I guess we'll get started, and hopefully, yes, people will join as we come along. So this is going to be quite a, I guess, broad topic, really. So the point was to talk about exchanges, what cryptocurrency exchanges do, just a general little bit about them and how they interact with cryptocurrencies in a sort of a wider sense. So what am I talking about when I'm talking about exchanges? Well, I'm assuming that most of the people that are watching this are have some cryptocurrency of some kind. They have bought some. Maybe they've bought some XRP or some Bitcoin or Ethereum or Litecoin or whatever it might be. And generally the way they would have bought that in most cases would have been they would have exchanged some other currency for that currency. Often it would have been a fiat currency, so it would have been something like euros or US dollars or Mexican pesos. And in exchange, they would have got a cryptocurrency. Or they may have traded something like Bitcoin and got another one, say XRP. Or it might have even been a multi-hop process and that they bought, say, Bitcoin with US dollars and then used the Bitcoin, moved that, and in turn bought another cryptocurrency with that. That's often what happens because a lot of the times the currency that people want to invest in or buy or speculate in or use or play around with or whatever, they might not have a direct fiat pairing, or they might not have a pairing on an exchange they can directly access. But this is one of the great things about cryptocurrencies is that you can move them around, and there's different ways of getting a hold of it. So the chances are you might have used an exchange, something along the lines of, say, Bitstamp, maybe, or Binance, or you might have used a service like Shapeshift, for example. Let's bring them up. Shapeshift, or you might have used an app. So there's people like Uphold, and there's various wallet and card services. There's people like WireX and LBX, London Block Exchange, that have various different ways to purchase cryptocurrencies. So some of these, like Uphold and LBX and Shapeshift, you basically just say you want to exchange one for another, and they give you a price, and that's what you get. So they list a price here, and I think you can go in here and say, okay, I want to. I have to sign in to continue here. But you can see a recent transaction. Someone has gone from here, so Ethereum to XRP, and you know, or Bitcoin to Bitcoin Cash, Bitcoin to Litecoin, and it basically gives you a price, and that's it. You either accept it or you don't. That's a much sort of simpler approach to exchanging things. These are what are generally called over-the-counter exchanges, in which you go in and you say, I've got £100 sterling, please. I would like some whatever back, some Bitcoin, please, or some XRP. And they'll say, sure, fine, okay, this is the rate. Do you want it? Yes, I do. There you go. There's no negotiation. There's just, this is what we offer. And companies like Shapeshift and Changelly are very sort of good with that kind of thing. They're very, very quick. So okay, here you can say I've got I can pick a currency here, but they also have, I think, so I could say, right, I've $100 and that will give me 0.43 Ethereum, or that might give me 173 XRP, and I can just go ahead and do it. No sort of real negotiation. If I want a better price, you know, kind of tough. But it's simple. It's straightforward. I can go from one currency to another, and some of them you don't even need an account on. So some of them you just give the wallet address, or you pay via cryptocurrency, and you get the other one come out the other end. So you say, okay, I want to go from Bitcoin. So 100 Bitcoin, I'd be so lucky. Let's say 1 Bitcoin to XRP exchange. Okay, so they do require you to have an account now. For a while, a lot of these services didn't require you to have an account, and that was one of the benefits of them. But it also brought about a fair bit of scrutiny from various authorities, because it allowed people to exchange currencies without any trail, which, as you can imagine, certain governments were not so happy with, and you know, put some pressure on these exchanges to change the way they did things. So on the other end, besides, so like I said, you've got likes of Changelly, Uphold, Shapeshift that allow you to just go in and say, okay, I've got, you know, I'd like to, you know, use this credit card or whatever, and get some money back. And then there's other ones in which you go in and you can actually place offers. So Tom Kussner adds, would you classify eToro as an exchange? Yes, I would do eToro as well, although eToro is slightly different, at least for the case of XRP, in that I don't think you can actually withdraw eToro XRP from eToro. I think I have an account on here, possibly. I should possibly check and see. I don't know if I've got a eToro. Yes, I do have an account on eToro. Let's see if I can. Let's see if this will let me log in. Yes, it will do. Okay, here we go. eToro as well. But like I said, eToro is a little bit different in that I don't think you can actually withdraw cryptocurrencies, but eToro covers all sorts of things, not just cryptocurrencies, but standard stocks as well. So Lloyds, this is a bank in the UK, for example, and you can actually, I think, buy and sell stock in Lloyds on here. Trade. So I can buy and sell, and I can set an amount. The trade will be executed once the market opens. Okay, so this is one of the things about exchanges and about cryptocurrencies. So a lot of exchanges traditionally, for the likes of stocks and shares, had a trading day. So the New York Stock Exchange, the London Stock Exchange, they ran from 9 o'clock in the morning to 5 o'clock in the evening or thereabouts. and you had a trading day, and you had stock brokers that worked on it, and there would be a case of the Japanese exchanges waking up now, so they'll start trading, and then suddenly you get the US and the European exchanges open at the same time, and the European exchange and Japanese exchange will be open at the same time, and things like that. With currency, with foreign exchange, and especially with cryptocurrency, it's a 24-hour exchange, so there's no start and end to the day, so it runs continuously. And so let's have another look here. Let's see. So for example, Bitstamp. So most of these exchanges have a fairly similar view. Let's see, Bitstamp, Binance. Let's look at Binance's, one of Binance's ones as well. So they have a fairly similar view of things. So in most cases, you have a sort of large area that is the chart that shows you the prices as they're going on sort of over time. So that's this bit in the center here. Down the side we have the historical trades. So this is the trades that have happened recently over time. So a couple of minutes ago there were some trades there, and then sort of further back in time as we go down. And down here in the bottom right, we've got the order book here. So this is the bit that makes it different from an over-the-counter exchange. These are bids and asks on the order book, and I'll cover that in a second here. Let's just look at Binance. They've got their order book here, ranged slightly differently. Rather than side by side, they're kind of above each other. We've got the chart, we've got the historical trade history, and there's various different what are called pairs, currency pairs. So for instance, I'm looking at TRX, Tron, and Bitcoin. So this is the price of Tron in Bitcoin, for example. Or I could look at something like the price of XRP in US dollars. Well, US dollars Tether on here. So Tether, if you've not come across Tether, Tether is what's termed a stable coin. Probably a whole other show we could talk about stable coins. But a stable coin is in effect a cryptocurrency that is intended to track a main fiat currency one-to-one. So $1 US Tether is equivalent to $1 US, roughly, within a couple of decimal points. And the idea is it's meant to be a sort of a stable, why it's called a stable coin. It's meant to be stable compared to cryptocurrency, and that it stays at $1 regardless. Some of them have some controversy around them. So Tether, for example, in theory, each of these stable coins should have actual real money backing them. So if there are 1 million Tether in existence, there should be a bank account somewhere with $1 million US in to back that. There has been some discussions around Tether's finances and whether or not they do indeed or don't have that money backing it. There's some other stable coins that have come out recently. The most recent one is the Winklevoss brothers and their Gemini coin. So they've got an exchange called Gemini. These are two guys, if you remember, they're Olympic rowers. They then invested a lot of their money in Bitcoin, became millionaires, possibly even billionaires, I can't remember, from Bitcoin. And they started an exchange service called Gemini. And I've not actually used it, but it is an exchange as well. So Gemini, the next generation digital asset platform. There we go. But it's an exchange, and we can possibly see whether they let us in there. They might not let us in there without an actual account. But you can see at least the order book here, the buys and sell offers. And Gemini dollar, there we go, that's their stable coin. So that's their version of US dollar on the blockchain. A bit like Tether, but here we go. Yeah, $1 Gemini is equivalent to $1 US at all times. And there we go. They have their purpose in certain regards. But anyway, exchanges. So XRP more decentralized than Bitcoin and ETH. I would say so. Whole other topic, but I would possibly say so. Cointal is a person-to-person exchange. It's quite new twist to exchange. Yes, Cointal. Yeah, this is a whole different area. So Cointal, is it cointal.com, I think? I think I had an account on here actually a while ago. So both CoinTal and there's another one. There's one that's been around a long time. Actually started by or run by a friend of mine, Miko Otama, who I know from a while back, called Local Bitcoin. And these are interesting takes on it in that they're person to person. So the flow of money doesn't go through the site itself. It goes directly between two individuals. So this is quite an interesting one actually. Local Bitcoin. I mean CoinTal as well, but local Bitcoin very much so. So say for instance, I want to buy £1,000 worth of Bitcoin. I can choose my currency here, and there's all sorts of currencies and all sorts of locations. But I can say here, all online offers, a quick search, and these are people willing to sell, and the price they're willing to sell at. So this person here will sell me £1,000 pounds worth of Bitcoin at a price of £5,209 per Bitcoin. Now what's quite interesting is if I go into this, it'll tell me how I can pay them. So in a lot of cases they'll have different methods to pay them, and you'll see payment method bank transfer here in the UK. I can actually say here, let's see where I've got in person, all online offers, cash deposit. Let's say they used to have, I don't think they actually specifically say it, but they used to have just basically person to person. The idea was that you could literally go and buy Bitcoin from somebody in a pub, and you look on here and it'd be like, okay, I'm in this particular physical area, I'm in Bristol, I can sell you some Bitcoin, we meet at this location and we go through this site, and it handles a bit of the escrow process to ensure that somebody doesn't run off halfway through the transaction, but they will literally do the exchange. So in this case, cash deposit with HSBC Metro Bank. So this means I can literally walk in with a bundle full of cash into HSBC and say, please deposit this into this bank account. It will be deposited there. This person will see it, and they will then send me the Bitcoin. And like I said, local Bitcoin takes care of the escrow a little bit. When the transaction starts, the seller has to put their Bitcoin into an escrow service on local Bitcoin. Escrow is just it's a word that means a service that means that one person can't sort of renege on a deal. So the funds are tied up by local Bitcoin whilst the transaction happens, and then they're released to me once we've confirmed that the money's gone through. And if it doesn't go through, if I don't actually deposit the money, then I don't get the Bitcoin. So that's a different type of exchange. And what's great with local Bitcoin is it's in many different countries as well. So I can go back and say, okay, Tajikistan. All payment offers. Let's see. There's nobody in Tajikistan. Wherever, Sudan. And I'm trying to pick somewhere quite esoteric, but to see if there's. No, maybe I'm going too esoteric here. New Zealand, not quite that esoteric, but hopefully, yeah, there we go. So different ones here. Transfers with specific bank, cash deposits, international wire transfer, PayPal, Steam gift cards. So there's certain other ways. People will say, well, if you buy me a gift card for the iTunes Apple Store, then I will take that as payment or whatever. So that's all quite interesting. Again, back to the more traditional style of exchanges. Like I said, in the middle you've got the price, and down the side we've got the historic trades, and then we've got the order books here. So first of all let's just have a quick look at the price. We've got a time frame here. So looking along the bottom here, we can see that this represents about sort of 3 days worth of time here. So this is the current time, and we're going back sort of 3 days in this case 30-minute increments. And I can decide to go coarser. I can say, okay, 1 day, and we're going back months here: October, September, August, July, down here. Or I can go more granular. I could say, okay, let's go 5 minutes. So this is what's happening every 5 minutes. Now, these the way these are arranged, these diagrams, are what's called it's called a candle chart, and it's a way of representing the price. So in each 5-minute period, there'll be the price at which that period started. That's called the open price. There will be the price at which that period finished. So 5 minutes later, what was the price 5 minutes later? That'll be the close price. There will also be the highest price it got to in that time, and the lowest price it got to in that time. And that's represented by this wick. So the solid body here shows that for this particular one, and the numbers will show up here, OHLCV, open, high, low, close, and the volume that was traded. So for this particular candle here, the open price was 6,611 what are we in US dollars for a Bitcoin, and it got all up to 6,630 was the highest it got to. So as you can see, this what's called the wick here that goes up, it went up really high, but it then came back down again. If it's a green candle, it generally means that it closed. Well, it definitely means it closed higher than it opened. So the price went up in that 5-minute time. The price at the end of that 5-minute period, which is at that point there, was higher than at that point. If it's a red candle, it's gone the other way. So it opened up there and it closed there. Now, there's a whole series of things people can do with analyzing these. There's a whole set of patterns with funny names: hanging doji, 3 black crows, inverted hammer, etc. That represent a series of patterns that are meant to indicate kind of what's happening. And people have dedicated, vast amounts of time in detailing how these, what these candles mean, and interpret a price movement from them. So here we can see a lot of green candles kind of going up. They might infer from that the price is going to continue to go up, but at some point it changes, it starts to come down, and they may have some interpretation of these candles to represent that. And people end up drawing lines all over charts and trying to work out what that means sort of going forward. It's a little bit like reading tea leaves. There's definitely something in it, though. I will say it's not all completely hocus pocus. There's definitely something in it, and that they often capture a kind of a dynamic of the market. It is kind of, a lot of times the market is treated as kind of a bit like a spring or an elastic band. When you twang it, that'll go one way and then it comes back the other way. So people will sort of talk about sort of waveforms, and as it kind of goes up and then it'll come down and go up again, and they'll talk about sort of 5 waves in formation and how they kind of go up and down, and they'll sort of draw lines and say, okay, it's getting sort of smaller, and you get sort of a wedge-shaped form. So people might sort of draw a line from the high points and the low points from a particular point and say, okay, they cross at this point, and that's gonna mean something. I think there's definitely something there. In traditional stocks and markets. In cryptocurrency, less so, because it is just so volatile. You could have all the analysis of the chart you could possibly want, and then some minister in some country says something, saying they're outlawing something or changing laws, and suddenly everything drops, or there's a rumor about something happening with the currency and it shoots up in the air. So it's kind of, there is something there to it, but there are other factors that completely blow it out of whack. So Tom Kuster asks, maybe AI could be used. Yes, it could be, Tom. So I've actually, the funny thing being is I've actually been working on this myself as a side project, using machine learning to try and interpret this, and I've actually been working on a system to try and see if it can predict prices. And it's quite interesting to see what it can learn, and whether or not there is enough information in there to try and make any predictions that are worthy of trading. The initial things seem to show that there could well be. There's different methodologies, and that could be a whole other show. If people are interested in that, I'd be more than happy to kind of talk about that, some basics of kind of machine learning and how people are trying to use machine learning and AI along with kind of cryptocurrencies and big data, and put it all together. So it could well be there. Yeah, I'm hoping there is, because I've been playing around with it a bit. But I'm still sort of open-minded. There's a question as to whether or not there's information represented in here, or what other information there is that could be represented that could be useful. And I actually did a talk. If you look on my YouTube channel, about 2 weeks ago, there's a talk I did about using machine learning to try and interpret. And it's only a short talk. It's only about 10 minutes. It is reasonably technical because it was given at the Bristol Python Data meetup. So it is reasonably technical. But like I said, it's quite short. It's quite, I think quite light-hearted. So by all means, take a look at it on the YouTube channel and see what you think. It'll give you a bit of an idea as to what might be possible. So, okay, back to the charts. We've talked about the graph here and the candles. Then the other bit we're going to talk about is the order book down here. So there's two sides to an order book. There's the bid and the ask. The ask is sometimes called the offer. So what it is somebody is saying, I am willing to sell you a certain amount of a good for a certain amount of price. And then there's somebody else on the other side saying, I'm willing to buy it. This is the marketplace. Imagine a marketplace, a fruit market or whatever, and you go in there and there's somebody saying, I will sell 4 bananas for £1. There's somebody else that might say, I will sell 4 bananas for £3.80. There might be somebody say, I will sell 4 bananas for £4.10. And you might say, okay, well, I'll take the 4 bananas. I want to buy bananas, so I'll buy 4 bananas for whatever the lowest price I said was £3.80, because that's the lowest price. But it might be a case that they've only got a certain number of bananas. Maybe they've only got 4 bananas, and I actually want to buy 8 bananas. So I end up having to buy 4 bananas at £3.80, and then the next level of price is the £4, and so I then buy 4 bananas at £4. So I bought 4 at £3.80 and 4 at £4. That's the levels, and that's what you see along here, that these are different ask prices and bid prices. So conversely, as well as somebody saying, I will sell 4 bananas for £4, you'll have somebody else saying, I'm willing to buy. The difference between those two, the 50p, is the spread, right? That's the difference between what somebody is offering to sell and what somebody is offering to buy at. And somewhere in the middle, a trade will happen, right? There'll be some bartering, some negotiation. £4, £3.50. Okay, well, what about £3.90? What about £3.60? Well, we'll meet you in the middle. Blah blah blah, and eventually somebody will then buy it, right? And that's what happens here on the exchange. So we look down here, we see the bid prices. So we can see here that actually let's look at Binance as well, because that's possibly a little bit easier. Binance, the bid and the offers, they've put one above each other, and the price in the middle is what's called the mid-market price. That's the mean, the average between the best ask price and the best bid price on there. So you can see there that there's, and this is continually changing. There's offers being put in all the time, and if I want to buy, then I've got a choice. I can buy right now, which is what's called a market order, in which case I don't really care what the price is, I just want it now, and it will take whatever is being offered. Or there's the limit order, in which I put a thing on. So go back to our bananas in our market. Somebody's selling bananas for £4. 4 bananas for £1 rather. I've got my numbers all completely mixed up. Hopefully that didn't ruin the analogy. But somebody's willing to sell 4 bananas for £1. I go in there. Now, I can either choose to take that offer. I can say, okay, I will take 4 bananas and I'll give you £1. That's a market offer. That is buying what is there. That is what's called taking liquidity from the market, because I'm taking something. When I take that, that is no longer on the order books, right? I've taken those 4 bananas out of the market. I could go in there and I could say, okay, I don't want to buy 4 bananas for £1. I only want to pay 80p for 4 bananas. Now, nobody's willing to sell that to me, but I could put that on an order book. So let's literally say I write it up on a chalkboard in the market and say, I'm willing to buy 4 bananas for 80p. I write it up on a chalkboard. then one of the sellers at some point could actually say, actually, you know what, today's a bit slow, I'll go for that, and they might take my offer, right? And so that's the bids and the offers here. So we've got one above the other, and they kind of meet in the middle. On Binance and on Bitstamp, you see them side by side, and the prices at the top is the best price. So it'll either be the cheapest price that somebody is willing to take for something, or the most they're willing to offer to buy something for. Hopefully that's clear on there. And so Tom asks, how valuable is the info in the order book? Well, it can be quite valuable, and that's why if you see a lot of exchanges, so looking at Bitstamp, we've got this down here in the bottom left. This is called this shows the depth of the order book. So this is the cumulative offers that are on here. So right down the middle, this is in the middle is our midpoint, and then we've got asks on one side and bids on the other. And so this is the cumulative amount, and the price goes up. So what this means is, if actually I wanted to buy 1,000 Bitcoin right now, then I need to be putting in a bid about there. $7,018 is what I'd have to be offering in order to buy 1,000 Bitcoin. Because there's some better prices. If I only want a few Bitcoin, I can pay a lot less. 6,680. I can buy a lot less, pay a lot less. But there's not that many for offer on there. So it kind of gives you an idea of how many people are waiting, kind of, in the wings on the order book. If you really wanted to buy a lot, how much is available there and what it would cost you, and the kind of the slope of this gives you an idea. Now, actually, there is. Let me try and move this a little bit because you can't quite see it. No, you can just see it behind the picture of me. I can't move the. Can I make it any bigger or smaller? Maybe. Here we go. Not quite. Well, you can just see it behind here anyway. This vertical bit is called a wall, and on here is basically there's a massive jump. So somebody's gone in and offered a large amount at that price. You'll sometimes see these walls appear, and if somebody wants to kind of get past that price, if the price is trying to go up or down, it has to consume all of the offers at that price first. But there's a bit of a game traders play, and some will put an offer up and then immediately withdraw it, or put it up there to kind of scare people in a certain direction. Back to our market, selling bananas in there, 4 bananas for £1. I could rock up in a great big truck and say 4 bananas for £1. I could sell 4,000 bananas for 80p, and suddenly all the people with 4 bananas for £1 go, ooh, okay, well that's gonna dent our market. If they're selling so many bananas so cheaply, we better lower our prices in order to compete. And so that's what's happened. When a big order comes in on the order books, it can kind of affect what happens. It says this kind of game that happens, and this sort of tug of war between the buy and the sell side. The event. Tom asks, is it mostly trade bots that do the trading nowadays? Yes, there are a lot of trade bots that do a lot of trading. I write one myself that runs on the XRP Ledger, and the machine learning AI stuff I'm doing is related to running a trade bot as well. And in a lot of main exchanges, the stock exchanges, it's all automated trading. There's a few humans in there trading as well, but a lot of it is what's called algorithmic trading. It's computers there buying and selling as part of a wider strategy to get the best out of the market. At the end of the day, it's kind of a game, and for everyone that wins, somebody loses in effect. So it is a sort of a zero-sum game there with trading. If you do very well, then in buying something, then potentially that means somebody else has not done so well. It's not quite as simple as that. It's not quite zero-sum, because the value goes up over time, and it depends upon what somebody's actual motivation is. If I've got a whole load of XRP or Bitcoin and I want to sell it because I need it quite quickly, well, I don't really matter what the price is. So if I bought it a few years ago, the price is going to be significantly higher. So do I care whether it's whatever it was, $6,800 per Bitcoin or $7,000 per Bitcoin. Well, I probably don't care if I bought it at $700. It's still, it's still very good price. So in that regards, it depends upon the sort of motivations of people. So Roderick Lugans asks, I imagine those are the tools that whales use. Do you believe in whales? I do believe in whales. So a whale is a term given to a trader that has a large amount of currency. The idea is that, the analogy is they are a whale under the surface. You don't see them until they come up, and then they make an almighty splash. They blow off a bunch of water, and then they kind of submerge again, and they can move. They make a big ripple in the sea, and that's what happens with whales in the cryptocurrency market. There's people out there with large amounts of money, large amounts of cryptocurrency, and they can come in, and if they decide to sell all of it very cheaply, they can move the market. Again, back to our bananas analogy, like I said, if I turn up with a truck full of bananas and I've got 10 times more bananas than anybody else, and I sell them at a really cheap price, I'll crash the price of bananas. It might be that what I then do is I then offer to buy them back cheaper. And that's kind of what whales often do. They will try and use large orders to move the price one way or another, and then buy again. So you hear what are called pump and dump schemes as well, in which they will try and get a lot of people to all try and buy, and then as soon as it gets to a high price, they immediately sell everything and the price drops down again. So pump and dump schemes are illegal in many exchanges. I think they're actually illegal in cryptocurrency, but the exchanges themselves are not regulated, so it's not enforced particularly. But it's not something that is able to happen, at least conspicuously, on normal stock exchanges. So yes. I hike around ask, is the majority of crypto money from miners and early adopters? It could well be. I'm sure there's a lot of people out there that have made vast sums of money just because they happen to have a bunch of cryptocurrency. It wasn't worth anything at the time. I was messing around with Bitcoin a few years ago. I don't have any of it left, unfortunately, because I didn't think it'd be worth anything at the time. And but there's people there that did manage to accumulate whatever, a few thousand, tens of thousands, hundreds of thousands, when it was worth pence, cents, or whatever, and then now it's worth thousands of dollars. So I think a lot of it is from the early adopters and the big mining conglomerates. So HP asks, do you see a $10 XRP? Yes, I do. I generally don't talk about prices on here on this show, but I do. I've said it before. I do see that happening. So yes. So Tom Costner asks, maybe you should explain bear and bull markets on exchanges. Yes. So two terms you might have heard are bear markets and bull markets. A bear market is basically a market that is generally going down, and a bull market is a market that is generally going up. So people talk about bears and bulls. They take the analogy a little far, I think, but they say, well, if the bears are in control of the market, it basically means the people that are trying to get the price to go down are having a bigger influence on the market. Or if they say the bulls are back in charge, it means that the people that are trying to get it up are going up. And so you have this kind of bull and bear kind of sort of fight for the market between the two. I don't know where it originally came from. It's traditional finance, originally. But yeah, that's what bear and bull markets are. Anyway, talking about exchanges, the bit that I sort of wanted to get onto, I was kind of trying to describe the elements of an exchange here. So Bitstamp and Binance are centralized exchanges. They are exchanges in which you send a currency to them, and you will then exchange that currency on the exchange. So if I send some XRP to Bitstamp, it leaves my XRP wallet and goes to Bitstamp, and Bitstamp then basically put it in their wallet and hold on to it with all of the other cryptocurrency they have, and they basically effectively give me write me an IOU for it. If I send them 1,000 XRP, they then hold 1,000 XRP, and if I log into my account, I'll see I have 1,000 XRP with them. Now, if they suddenly go bust, that, my XRP is gone. It disappears with them. Now, this very famously happened with an early Bitcoin exchange called Mt. Gox, in which a whole bunch of early adopters of Bitcoin, there were some rumors of impropriety going on the exchange, and trading bots are on there that were creating artificial volume on the exchange, making it look busier than it was. And the rumors are that there was a security breach, that some Bitcoin had been stolen. These bots were used to ensure to make it look like they were still there, because there was lots of trading happening. In the end, it all got shut down and literally sort of seized and everything, and everybody's Bitcoin, effectively disappeared. It's now slowly being repatriated to them. They're probably quite glad it is, because it's now worth considerably more than it was when it was taken from them. So kind of enforced holding of the currency. But the point being is that if, say, Bitstamp or Binance or Kraken or any of the other Bittrex, etc. exchanges suddenly go out of business, they would take your cryptocurrency with them, because your cryptocurrency is stored on the exchange. It's no longer your currency in your control. They effectively give you an IOU for it, right? They take that and they say, okay, this user has 1,000, this user has 500, this user has 10, this user has whatever, and they've got a centralized database that keeps track of all of that. On the XRP ledger, because we talk a lot about XRP on this, because it's one of my favorite cryptocurrencies, and a lot of it, same with you, XRP has a built-in decentralized exchange. So what this means is, rather than me sending XRP to an exchange, them giving me an IOU for it, and me trading it there, with the XRP exchange, I can trade directly on the actual exchange itself. So here we go, we have the bids and the asks, and we've got the price, and it's showing it as a line, but I can get it to show as a candlestick, similar sort of fashion. And there's the historical trades that have gone on. In this case, we're looking at XRP versus Chinese yuan on here. So 1 second, sorry, I'm losing my voice a second. XRP to Chinese yuan. Now, what happens on the XRP ledger is that there's an IOU for this actually stored on the ledger itself. So that IOU was issued by a particular company. Let's take another example here. If we take US dollars, for example, just confusing, Bitstamp do offer US dollars, but let's take another example. If we take GateHub. GateHub, for example, are a company, a website you can go to. And GateHub allow you to trade XRP. And what they do is they actually trade it directly on the XRP ledger. So it's not being taken off the exchange. The XRP ledger has the ability to store offers directly on the ledger. So what does that look like? Let's just give you a bit of an example here. Pardon me. If I go to, actually I can show you from here, from the XRP charts, transactions. Here we go. These are the live transactions going on the XRP ledger. You see a lot of them are these offer creates. So if we click on one of those, so this offer create, so this is an offer create transaction by this particular account, and they offer to pay $2,500 US as issued by Bitstamp in order to receive $2,495 as issued by GateHub. So this is quite interesting. They're actually exchanging US dollars for US dollars, but they're US dollar IOUs issued by two different issuers. So one's by Bitstamp, one's by GateHub. What is an issuer and what's an IOU? On the XRP ledger, we have XRP, which is the native currency. That has no counterparty. That means that if you've got XRP you can use it, you can spend it, you can send it to somebody else. Nobody else can say what you can or can't do with it. There's no obligation. You don't owe anybody anything for holding XRP. With the IOUs, so in this case, that's what these US dollar transactions are. What it means is that at some point somebody has given Bitstamp $2,500 US, and in turn, Bitstamp has taken that $2,500 US and given them $2,500 US worth of an IOU on the ledger. So it's not just centrally on the exchange, it's actually recorded on the XRP Ledger. So if Bitstamp were to go out of business, it would still be recorded on the ledger. Now there's a slight caveat to that, and that's the case of Bitstamp are the only people that you could redeem that with. So that $2,500 US from Bitstamp, that IOU, you'd have to give it back to Bitstamp to get that $2,500 back into actual real dollars and transfer it to your bank account, for example. But the idea is that there's IOUs on the ledger, and you can exchange them. So let's have a look for some other offers here. Oh, here we go. Somebody's offered to pay 0. Let's see if I can make this a bit bigger for people. Here we go. Somebody's offered to pay 0.1408 XAU. That's actually a gold IOU on the ledger. So there's a company that actually allow you to trade gold on the XRP Ledger in return for 9.5 nears damn it XRP. So they want to sell a bit of gold and get 9.5 XRP in return. That's the exchange rate, and that will sit on the order books until somebody takes it. Well, actually, in this case, it won't actually, because it's got this what's called fill or kill flag, which means when it comes in, it has to what's called consume another order. So I'll mark it with bananas. I've come in and said, this is how much I'm willing to pay for bananas. There has to be somebody willing to sell at that price. And if there isn't, then my offer is just gets disregarded. It doesn't get written up on the whiteboard to say this is what I'm willing to pay. Right? It disappears immediately. That's what that fill or kill means. So they could put that offer in, and actually what happens is this shows you what happens on the XRP Ledger, and the only thing that happens is the account root node of that account was reduced by a tiny amount of XRP. That's the fee. For each transaction there's a fee that's burned, and that's a fee there. If it wasn't a fill or kill, it would actually show up as an offer. So let's try and find another one. Offer create. Here we go. XRP for Chinese yuan, and it creates an offer. So created nodes an offer. So it created an offer on the ledger, and so that's what would sit there for somebody else to come and exchange for. There's an expiration date, so it's only valid for a certain amount of time. There's the exchange rate that's worked out there, and it cancelled the previous offer. So it's an update of a previous offer that somebody's put in there. Let's see here. Product lumens. If I'm not mistaken, inside the XRPL exists an exchange. Does anyone can use it? Yes. So that's what I'm showing here. Anybody can use it. There's various different ways to access the exchange. Because it's decentralized, you can get to it from any different way. GateHub, as I mentioned, GateHub are one company that allow you to trade directly on the exchange. They're not a centralized exchange, they're just a view onto the decentralized exchange. And some wallets let you directly place offers on the exchange. So, for example, the RipX desktop wallet allows you to put an offer in on the exchange. So you can do that, and you can then get possibly somebody might consume that offer, and the exchange will complete. So I could put an offer on there and say, I want to exchange this amount of XRP for a certain amount of whatever Ethereum, and at some point somebody can come along to exchange it. Sorry, my voice is still going a little bit here. So That's the exchange within the XRP ledger. So it's used a fair bit, not as much as it used to be used. So Ripple had a strategy at first of getting these gateways. So Bitstamp, GateHub, the company that does the gold, they were what are called gateways, and they're how you get IOUs issued on the ledger. The problem being is that people were concerned that these IOUs were an obligation to somebody else. That they had, you know, if somebody gives me $500 Bitstamp IOUs, the only place I can redeem them is back with Bitstamp, which means that Bitstamp is the counterparty, and there's a counterparty risk. If Bitstamp were to go bust, I'd still have the IOUs. They'd still be recorded on the ledger. I still own them, but there wouldn't be anybody for me to redeem them with. And so that's why Ripple switched to the mechanism they're working on with XRapid, which is where it uses XRP directly on the ledger instead, rather than trying to use the IOUs. But the exchange is on there. Now, other cryptocurrencies also have a similar kind of system. And with Bitcoin, they're working on a thing called atomic swap. So atomic swaps allow you to. So atomic in this case, just so people, because people might have heard the word atomic here. Atomic in computer science means that something happens as one transaction, all at once, either all or nothing. It's nothing to do with radioactivity or anything like that. An atomic transaction is a transaction in which it's guaranteed that either everything happens or nothing happens. There's no halfway state. So an atomic swap is I give you something, you give me something. And there's no way I can give you something and you can run away and not give me the other thing. And the way that they are, you can create a smart contract that means cryptographically you can prove that one person has given the other person what they need and release it. So you have a series of escrows in which the funds are locked up. So both people lock the funds up, and then the keys are given to either party and then both can unlock them. But there's not a situation where one person can unlock it but the other person can't. I'm trying to see if there's a sort of diagram maybe explaining this. How this happens. So here we go. Here's a possibly one. If this loads, here we go. Atomic swaps. So Alice wants to send Bob 1 Bitcoin. Go away. I don't want your thing. Alice wants to send Bob 1 Bitcoin, and in return wants to get 77 Ethereum in return. And so they want that to happen in such a way that Bob gets the Bitcoin and Alice gets the Ethereum, and not one of them can't run off with the other one. And so there's a series of, I'm not going to go through this in full detail, but there's a series of signatures and kind of and things that happen to lock the coin up, in which the keys the coins are locked up with a key, and that key is then given to the other person in a particular order that means that that transaction is atomic, that there's only one way in which it can go ahead. And the idea of what are called cross-chain swaps means that two different blockchains or distributed ledgers can exchange currency between each other, or between two people, and again it's atomic between the two chains. And it used a thing called hash time locks on there, and that's kind of the sort of main key that allows that to happen. So there's decentralized exchanges that are starting to allow that to happen as well, and there's a few of them for sort of Bitcoin and other cryptocurrencies as well, to allow the exchanges to happen. One of the things that isn't in most cases is a decentralized order book. So there's still, most exchanges have a sort of a more centralized order book that has the offers in. But yeah, that's the atomic swaps. And actually, this now is partly what happens with ILP, the interledger protocol. So ILP allows you to have a kind of a gateway from one cryptocurrency to another. And the idea with ILP is I can say, pay me in XRP, and it doesn't matter what the other person starts a payment out at. It will find a gateway that can translate whatever they have to whatever I want, and it uses these hash time locks in order to make that transaction atomic, so that we know that it can happen safely. So Roderick Lumens asked, does Bitso, Mexican peso, work inside the XRP Ledger exchange? No, it doesn't. I don't think there's anybody offering MXN on the XRP Ledger as far as I'm aware. We can go back and have a look at the markets here and see. Is there anyone offering MXN? Okay, so there's MXN there. Bitso, right? So they were, I think, at one point, but they're no longer. They're no longer doing it. So there are a few, people still willing to buy or sell. So maybe there's some IOUs out there that people have. If we go back, so it's been a few transactions. But there we go. If we go back to right between 2015 and 2017, it looks like there was lots of activity of Bitso working on the XRP Ledger. Pardon me. So, but they looks like they're no longer trading directly on the XRP Ledger, so they are just running their sort of centralized exchange on there. But Bitso are being used for XRapid, one of Ripple's products. And the way that XRapid works is you send Mexican pesos to Bitso, they get exchanged for XRP on Bitso's centralized exchange. That XRP then gets sent, say, to Bittrex in the US, and those on the XRP Ledger, they are received at Bittrex. Bittrex then exchanges them on their centralized exchange to US dollars, and then send them on to the final destination as US dollars. So the point being is it's sort of XRP is being used in the middle there. That's kind of the thing that Ripple announced just last week, that's gone into production finally with a few of their sort of key customers there, and they're working up to kind of more stuff. So that's been an hour. I should probably stop as I'm losing my voice a bit here and coughing quite a bit at you. But if there's any more questions, that's hopefully given a bit of an overview about sort of exchanges, what the sort of elements are of an exchange, the difference between centralized and decentralized, a little bit about the ledger, the on-ledger exchange with XRP, and a bit about sort of atomic swaps and some of the functionality that's there for other blockchains and how it's used as well. So yes, if anybody has any more questions, then speak up now and uncover them now. Otherwise, I will stop the stream in a minute. So we've gone on about an hour now. So. Okay, I guess hopefully I've covered everything. So if anybody has any further questions, then you can grab me in the comments on here or on Twitter, and we talk about them. So thanks very much, and I will see you hopefully next week as well. Thanks a lot then.